Hello, welcome back to my YouTube channel. This is Aishwarya. In this video, we are going to see how to journalize a transaction. Okay, so when a transaction happens, we do not directly go and enter it into a account. The first step we do is journalizing. Okay, so in order to journal it, what do you require? We require a source document, which can be a bill, invoice, or a receipt, that is the actual proof of the transaction that has been happened. So based on that, we will journalize, and from the journal we'll be posting it to the respective ledger accounts, and that process is called posting, and recording it in the journal is called journalizing. So journal is also called the original book of original entry, okay, and ledger is also called principal book of entry. Okay, now if you see the journal, it has a whole set of books to make transactions easily recordable and identifiable. So first it is the journal proper, the cash book, the purchase book, sales book, purchase return, sales return, bills receivable, bills payable. So journal proper has all the transactions. Cash book will have the transactions where cash is involved. All the purchase of goods will be recorded in the purchase book. Sales will be recorded in the sales book. Purchase written will have a separate book, and if there is a sales written, that will also be recorded in a separate book. And bills receivable, what about all the amount that we are supposed to receive from the debtors? That is nothing but the bills receivable, that will be entered separately, and the bills payable book. Okay, all these are maintained in such a way that the transaction becomes easy to identify and record. Now, how to write a journal entry? So if you see a journal, this is the format. So first we'll have the date, then the particulars, then the LF. LF is nothing but the ledger portfolio, because from the journal entry it will be posted to the ledger account. So that ledger, the leaf number, okay, where the account number, so initially it used to be recorded in the physical books, so ledger books will have something like similar to page number, so that number will be entered here so that you can easily locate your ledger accounts. Then the debit amount, the credit amount, and there's something called narration that will be given, a brief note about the transaction, what has been happened, so that whenever you read the narration you will know what transaction has happened. Okay, and if the page is over, okay, the total, you will be using CF, you will total and write the amount, and you will take it the next page as BF, balance carry forward, and then again it will continue. Okay, so first here the transaction is furniture is being purchased with cash. So earlier we have seen, in a transaction we have to identify minimum 2 accounts. So here 2 accounts are involved, one is furniture account, the other one is cash account. So both are asset account. Okay, now how will you identify which to debit and which to credit? So in the first line you will write the account that is to be debited. So when you buy furniture, furniture is coming into the business, so there is an increase in asset. So furniture is increasing, so furniture account debtor, so furniture account I am debiting. Okay, and the respective amount I am writing it in the debit column. Okay, I will start from the line margin. That's how you have to write furniture account debtor to debit account. Okay, next, which account is being credited here? Cash account. Why? Cash is also an asset, but there is a reduction of cash. I have paid cash to buy furniture, right? So the 10,000 will be reduced from the cash. So decrease in asset will be credited. So when you are writing the credit account, you leave a small space in the beginning, and then write to, then cash account, then you will write the amount in the credit. Okay, so if you even see with the golden rules of accounting, debit what comes in, credit what goes out. Here what is coming in? Furniture. What is going out? Cash. So we'll debit furniture account and then credit cash account. So the journal entry will be furniture account debtor to cash account. Okay, that's how we'll enter. Now few more examples we will see. The first one we have seen here. So all these entries which has only two accounts heading are called the simple entry. Okay, This one more example, capital introduced in cash. So cash account debtor to capital account. What is coming in? Cash. So cash is an asset, there is an increase in asset. It is coming in the form of capital, which is, so capital will come in the credit side, right? So capital will be credited. So the journal entry will be cash account debtor to capital account. So this will be the debit amount, this will be the credit amount. Then purchase account debtor, here goods purchased for cash. So whenever a goods is purchased, you cannot write goods account. I have told you, it is always the purchase account. Okay. So purchase account will be debited because goods is coming inside the business. There is an increase in the asset. Now what is going out? Cash. That is a decrease in asset. So that will be credited. So purchase account data to cash account. This will be the entry when goods is purchased for cash. You can see a small narration is given beneath all the transactions. So writing the narration is very important. Otherwise you will lose marks. And even for a practical purpose, by reading the transaction I can know what this entry is all about. Now next, compound entry. Compound entry is where the more than two accounts are involved in a transaction. Here you can see rent account debtor, salary account debtor to cash account. So they have utilized 7,000 to pay 5,000 as rent and salary for 2,000. Okay, so both are expenses, so we have to debit all the expenses, right? And cash, there is a decrease in the asset, so cash is credited, or you can say debit all expenses, credit what goes out. So here rent is 5,000, salary is 2,000, cash is 7,000. If you see, they all debit should be equal to the total credit. Okay, that is very important in a journal entry. Debit and credit should be equal. So 5 plus 2, 7,000, and credit side is 7,000. Now what is the narration here? Rent and salary paid in cash. Next, here cash is received, there is a discount allowed, and to debtors account. So there is some debtor who is supposed to pay us. Okay, so he is supposed to pay us 10,000, where the company has given him a discount of 500 and 9,500 net has been paid. So cash received and discount allowed. So here debit what comes in, or cash is an increase in asset, right? So we are debiting it. Now discount allowed. If you see from the company's perspective, discount is an expense, right? We've bared that 500 loss. So that has to be debited. Now debtors, credit the giver. Who is giving? The debtor is giving, so credit the giver. If you see 9,500 plus 5,500, debit side is 10,000 and credit side again it is 10,000. So this is a compound entry. So these are the few examples of journal entry. It is a very preliminary step of accounting. So hope it is clear for you. I have explained with some examples. There are more videos where I'll be doing problems. You can check there. If you have any doubts, do let me know in the comment section. The same video is also available with Tamil explanation in the description. Do share and subscribe my channel if you like it. Thank you. See you in the next video. Bye-bye.